Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu, Hawaii. It is Friday, finally, the 14th day of October, and this is the daily report for gold, our weekend review. Gold finishing the week on a strong close, closing up approximately $14 on the day, closing above that elusive mark that we have been talking about all week. It's been essential when we look at our December contract of COMEX closing at 1683, cash spot closing right at 1680.53. But as you know, my daily listeners, that is a critical number for us. Of course, we got into this market roughly at 1640. We protected that with an option. That market has been moving nicely for us, and I feel comfortable about the trade. Let's start by looking at a daily chart, and the daily chart I want to look at is a chart of our COMEX December contract, specifically our MACD. And with the MACD, the moving average convergence divergence, you know that what we look for is really a widening within these moving averages, because as that market widens, of course, what that tells us is that the strength of the trend, the strength of the movement itself is very strong. And of course, the other thing that we like to do with that particular market in terms of looking at it is to look at what is called the chart in terms of what is known as a Henkin Ashi. Of course, the Henkin Ashi is a Japanese average, and it also gives us some new information and insight into the market. And here's what we're seeing. When we take a look at it from this particular format, I can tell you this. First of all, we're not really seeing any real strength to the trend. If you take a look at when we've got real strong markets, you're going to notice two things happen. The first is that you're going to get this absence of tail, like you get right in here, and as you can see here. The second thing that you're going to notice on a Henkin Ashi, besides the absence of tail, is the length or body size of the candle itself, the Henkin candle. You can see that these Henkin candles, this is showing some real strong strength, but you can see that the body size is rather small. At the same time, you can see when this really pushed up right in here, how even though you still have, as I said, at the same time, you are lacking, which is a good thing, you want to, these bottom tails. At the same time, these body sizes grow. Now, this market, as we look at it today, you can see it was trading pretty erratically in terms of the marketplace itself being in a tight range, but the marketplace itself is moving up, and that's indicative of the type of candles that you're witnessing. And in other words, you've got these candles right in here moving higher, and you do have an absence of tails for about let's call it the mid portion of them. However, at the same time, you've got very, very small body size. So I believe we're going to see higher prices next week. But I would certainly like to see a scenario in which this marketplace was showing us a more concerted effort on the part of gold. I know it's a funny way to say it, but I'd like to see a lack of tails and larger body size. Next chart that I want to look at is going to be a daily chart also. And on this daily chart, what we really want to focus in on is the different targets that I feel this market has the ability to go to. In other words, what are our basic overviews on the trade itself? Of course, we got into the trade roughly at 1640. So we've been in the trade since the 5th. It's now 10 days worth of exposure, and we're in roughly right here at this point. You can see that after this point, the market did break to the upside. Now, here's my belief. My belief is that what we are looking at in terms of a minor count is that we have seen our A, B, and C, and we're now headed into what's called our impulse phase, or our impulse waves. And again, this is the intermediate, and on the impulse you've got your A, B, and C. That's your correction. You're going to get something like this, a 1, 2, 3, 4, 5. You'll typically get something like that. I did not draw that to scale, but here's the key. That is, as I said, of our intermediate. When we look at it through the eyes of our major, and our major here's 4, this is of course 2 to 3, 3 to 4, 4 to 5. And my belief is that what we've really seen from here to here is really an A. It's a large major A right here. So from the large major A, we're probably going to get a B and then a C. And typically, your B wave is anywhere between 50% and 75% that of A, which is right from here to here. So just using that straight philosophy, that is where I've gotten my benchmarks for this trade. So we got in roughly 1640. I'm going to look to cover this trade roughly between this target area of 1729 and call it 75%, so about 1825. Somewhere in that area, I'm going to look for a point for us to cover. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for another daily report and update. Bye-bye.